All right, welcome back to another episode of Asset Coach and Tax Strategist. If you saw our last episode, we were talking about gold and Bitcoin and all that fun stuff, and this new mine they found, or more gold they found in an existing mine in China, all this fun stuff. Kind of exciting, dripping with sarcasm. I love that episode. Maybe one of my most favorite episodes from a sarcasm scale perspective. But what we want to do is we want to dive into now. I do want to talk a little bit about some more about gold a bit, but I want to transition into U.S. debt, and I find this to be so fascinating when we look at this and a lot of the rhetoric that we hear. So I'm going to share my screen. We're going to go through this and dive into this. So when we look at market cap, asset asset ranking by market cap, gold is the top at $17.7 trillion. And that's because of the price point at $2,600 right now. Okay. Now, what happens when this goes down back to one of the original $300 or $400 of gold actually just 10 years ago? Within the last 10 years. So this is bumped up. It's gone up pretty aggressively over the last 3, 4 years due to a lot of the uncertainty with inflation in the US and all this kind of stuff. And so this is why we're talking about. So when you look at Apple being the number two market cap asset, Nvidia, Microsoft, look at these all from the US, by the way. Then we get to seven, which is Bitcoin at 1.8 trillion. Okay. Been around for about 15 years. Gold's been around forever, right? When we read the Bible, when we read history, gold has always been a precious metal. So it's only right that it's at 17 trillion market cap. You would actually think it'd be higher. But here's the thing, with all these other reserves and these mines and all this opportunity, gold becomes more and more abundant. Does that increase the market cap, or the supply or the demand of that supply increase the market cap? That's the key here. So if that's the case, then Bitcoin being at 21 million total Bitcoin that's ever going to be around, and they're talking about making this a reserve, and you have all these other countries and corporations creating a reserve of Bitcoin, then this let's just say $2 trillion is going to have to go up. There's talk that this is going to be eventually a greater market cap than gold, and it will have gotten there in a less time than gold would have, because gold has been a precious metal for quite some time. Right now, if gold wasn't continually being mined out of the ground, then this actually could have a greater market cap because the supply is less, therefore the demand is greater. Okay. Now, so when you keep going through here, so we got Saudi Arabia's oil at 8, then we got silver at 9. And then you got more U.S. companies. Then you got a Taiwanese company, the Taiwan Semiconductors. Then more U.S. companies, and then we have the Spider ETF, and then we finally get the first Chinese company at 20. More U.S. Ethereum, which is the second cryptocurrency behind Bitcoin that is the most popular, and kind of use cases has expanded from there. And then more U.S. Oh, you got a French company, right? Which is Louis Vuitton is only valued that because we in America love to purchase, right? It's a good, it's a service, it's a luxury item. I'm not saying we're the only ones that buy it, of course. Then you got another Chinese, and then you start sprinkling in different countries and all that kind of stuff. So I find this interesting because when we look at gold historical prices back in the 1980s, January 1980, when inflation was double digits, we actually recorded it double digits, was when it was at its highest at 27.49, and now it's at 26.51. So almost at the all-time high. What's that? 44 years later. It's been a long run for gold. Long run. And at its lowest peak since 1980 was May of 2001, right before 9/11, right? And then gold bumped up, and we've had quite a bit of turmoil since May of 2001. And all these little gray lines here, as you can see, these are all different recessions. Okay. So it's been some time since we had a serious recession, the great financial crisis. We had a little tiny blip one in 2020, and that was due to the pandemic, the fake recession. But anyway, so that's interesting when you look at that. Okay, and the supply continues to grow. So now let's take a shift and get out of gold and let's talk about here. And I think this is such an important conversation is to who holds U.S. debt. Now, if you hear U.S. debt, U.S. debt, U.S. debt, U.S. debt, oh my goodness, we're in so much debt, we're in so much debt, we're in so much debt. Now, who holds the debt? Right? That's not something that's being talked about. We're under the impression that the US debt is held by China, right? But they have $820 billion or only 2% of our debt. Japan has 3% of our debt, an ally of ours, 1.1 trillion. We have the United Kingdom at 680 billion. And then all other countries are at 15%. So when you look at 100% of our debt, so let's do this. So we got 15% other countries, and we've got, let's see here, 4, 7, so 22%. So what is that? 78% is not held by foreign entities or foreign countries. I think that's important to notice. So 78% of the US debt is held by domestic $26.4 trillion. $26.4 trillion held American soil. Let's look at that. Federal Reserve holds 5.2 trillion or 15%. The Federal Reserve holds just about the same amount as all other countries outside of these three, China, Japan, and the United Kingdom. Okay. Mutual funds hold 3.7 trillion. So American investors, 1.6 trillion in depository institutions, banks of some sort. State and local governments, 1.7 trillion or 5%. US holders and savings bonds, 5.7 trillion. Pension plans, 1 trillion. Insurance companies, 480 billion. And then intragovernmental debt that the US government owes to its own agencies, 20%. So 78% of the US debt is held by the US. Is that good or bad? I don't know, but all I know is that as interest rates are high and the United States taxpayers owe on this debt, where does it go? Goes in house. Maybe this is why our politicians don't give a rip patootie about the debt. Because we're holding 78% of this. Think about that. Think about that. We're under the impression that the U.S. doesn't hold any of its own debt, that all of it's held outside. That's kind of the impression we get, isn't it? How's this make you feel? Quite honestly, it goes back to what I said. Since 2020, I question everything. So when I saw this, the first thing I was angry at myself because I allowed myself to listen to the rhetoric and understand that oh my goodness, the debt in the United States, how are we going to ever overcome this? Now, I'm not saying that 78% being held by U.S. Domestically is a good thing, but it's still in the family, folks. And investors have it. So that's part of, right? Mutual funds, the banks, that's part of the structure. U.S. holders and savings bonds, part of the structure. That's what debt and bonds are. State and local governments, pension plans, insurance companies. The only thing that really is of concern to me is the intragovernmental debt held by U.S. government owes to its own agencies. Why do our agencies hold debt? Isn't their budget paid by the U.S.? So I'm not sure what this is. This is a bit concerning because I just don't know what that means. So everything else I understand. And the reality is that if we're paying 9% on US debt and it's going to back to all of us, isn't that okay? And then the Federal Reserve's getting it, which is kind of what who issues the debt and controls a lot of that. I don't know. This again, I don't have all the answers. It's just opinions and thoughts, and I just find this to be extremely interesting. What do you think? Is this interesting to you, or is this does this not mean anything to you? I think there's a lot of value in this visual. And oh, by the way, I don't know if you let me share my screen back again. Down at the bottom, let's find out who's the resource. As of 2023, U.S. Department of Treasury, the Peter G. Peterson Foundation. So this is from the Treasury Department. All this information. So, anyways, just thought I'd drop that information on you. I find this to be very valuable and important. But I'm not so concerned about U.S. debt anymore, which is, and when I say that, I know it comes off like kind of somewhat flippant, almost like how our politicians just kind of ignore it. Now they use it as a political ploy, right? That's part of what gnaws at me a little bit, right? Um, but how many people actually know what this visual means? Has seen this? I find this interesting. If you haven't subscribed, hit the subscribe button. Be on the lookout. Every Thursday we drop new episodes. And if you have any comments, please add some comments. Give us a thumbs up to this content. This helps with the algorithms, gets this information pushed out to more and more people. At the end of the day, I appreciate you. I thank you for your time and investing that in with here. And I appreciate you being here. So thank you so much. My name is Robert Wolf, and I'm an asset coach and tax strategist. Make it a great day.